Alright, so far this year, I've been finding some success day trading micro ES futures. I'm currently up a little over 17% since February of this year, taking one trade per day if a setup presents itself. And I'm risking 1% of my account per trade. And yes, this day trading strategy and setup has earned me some prop firm payouts as well. I want to make it clear in this video that I am absolutely not telling anyone how to day trade or how they should day trade. This is just simply how I have been day trading. And I've been day trading for over 5 years now, and I still consider myself a beginner. And if you achieve better returns yourself as a trader, this video probably isn't for you. But if you haven't achieved any success similar to what I've shown in this video, then maybe my videos can get you on the right track. I do also have a private Discord. It's going to be the first link in the description. And yes, I will advertise it multiple times over the course of this video. But without further ado, let's go ahead and get right into it. And we'll start with the type of asset that I'm trading. I am a futures day trader. And specifically, I'm going to be trading micro ES or MES, which is essentially the price of the S&P 500 index. And next, I'm going to show you how you'll want to set up your chart. The first thing that you'll want to do, if it hasn't already been selected, is you're going to want to choose the regular trading hours. And I'm going to move my camera here so that you guys can see what I'm talking about. So the selection's usually down here somewhere. There's going to be extended trading hours and regular trading hours. We're going to choose regular. I also suggest choosing New York time as well, even if it isn't your local time zone. Next, you're going to select your settings option as well. And we are going to add some session breaks. So you'll have to select canvas and session breaks. And all this does is it's going to add some small little lines to represent each New York session. Next, we're going to add some indicators to our chart. Only indicator we're going to be adding is the VWAP line. Just in case you're interested, these are the settings for my VWAP line. And these settings are untouched. I've not made any adjustments to these settings, and the only thing I'll change is the color of the line, its thickness, and its opacity. And so this is it. Our chart is fully set up, nothing else to add. Currently, we're on the 15-minute time frame, and this is the time frame that I'm going to be beginning the day trading session on. Now, for today's example, I'm going to be using May the 28th, which was Thursday of this past week, as our setup example. And so the first thing that I do is I wait for the first 15-minute candle of the New York session to print and close. This is that first 15-minute candle. I'll take my rectangle tool and I'm going to highlight that first 15-minute candle. And I'm going to make sure that the rectangle that I draw over top of it is as high as this candle's wick and as low as the bottom wick as well. So we want this box to cover the entire candle, both body and wicks. And if you're interested in the settings that I use for my rectangle tool, these are the settings. Now, once the first 15-minute candle of the New York session has printed, closed, and you've drawn this box over top, which is going to serve as what we call my opening range, we're going to drop down to the 5-minute time frame. The 15-minute and 5-minute time frames are going to be the only two time frames that I use. The first part of this setup all starts with the direction that price is moving in. And we're going to use our opening range, so the box that we drew, and the VWAP line to determine what direction price is heading in. We want to wait for the 5-minute time frame price to break out of the top or bottom of the opening range and to have a candle body print and close outside of the opening range on the top or bottom. In this case, our first candle body that closes is out of the top of the opening range right here, and it also closes on top of the VWAP line as well. So as long as your candle has printed and closed on top of the opening range, on top of the VWAP line, or below the opening range, below the VWAP line, that's going to give us our direction. In this case, since it's in the top, we know that the price is going to be moving up, at least for right now. And so if price is moving upwards, that means that we're going to be most likely taking a long, which means to buy micro ES. And the opposite for if it would have been below. If it would have been below, we would be taking a short or selling micro ES. Now, once price breaks above here, the next thing that we need is a pullback. If you know anything about day trading, price usually moves in this type of direction. In order for price to continue moving upwards, it needs to pull back periodically before continuing to move upwards. And for these pullbacks to be considered valid pullbacks, they usually need to pull back somewhere between 30 and 50% of the most recent move upwards. One good way to know how far a pullback has gotten is to use a Fibonacci retracement tool. So for example, I can pull up this Fibonacci retracement tool over the course of this whole move upwards, and then I can measure, using the Fibonacci levels, how far back the pullback has come. The most popular levels for pullbacks to come to is anywhere between the 0.5 and 0.618 Fib levels. Some people call it the golden zone. But for myself, I like to see a valid pullback come at least below the 0.38 level. So in this case, price pulls back, crosses the 0.382 level. It doesn't touch the 0.5 level, but it gets quite close to it. I consider this to be a valid pullback. Now, if you decide to join my private Discord, which is the first link in the description, I like to post the screenshots of all of my day trades and what price looks like during these day trades. And this is basically just material that I'm putting on the Discord so that people can study exactly what these pullbacks might look like, what they look like for winning trades, what they look like for losing trades. So if you're interested in that type of thing, first link in the description. Another thing that a valid pullback needs to have is it has to have at least 2 consecutive candles in the opposite direction during the pullback. So in this case, the pullback is a valid size that we determined using our Fib retracement tool, and we have a couple of consecutive bearish candles to the downside within it as well. Sometimes you'll even notice these pullbacks retest the VWAP line. Sometimes they'll retest the opening range as well, where it either visits the VWAP line to bounce or visits the opening range to bounce. In this case, we didn't get any retests, but our pullback is still a valid size, and we still have a couple of consecutive bearish candles to the downside within it as well, so this pullback works. The next thing that we need following the pullback is what I call a confirmation candle, or in other words, a powerful candle in the direction that we want to see, which in this case is up or long, that convinces us that price is continuing in the direction that we want it to go in. That's why this first setup that I'm making this video about is what I like to call a continuation. For our confirmation candle, there are a couple of things that I want to see for a confirmation candle. I want to see a powerful candle in the direction that I want price to go in, with fairly small wicks on both top and bottom, and a fairly full candle body. This bullish candle here would be a good example. Fairly small wicks on both top and bottom, a pretty full candle body at the close of the candle as well. There's only one thing about it that I don't like, and it's its size. If this candle was larger than these pullback bearish candles here, that would make it a great confirmation candle, and we could call it a bullish engulfing candle. But it isn't larger than any of these candles during the pullback, and so what I'll do is I'll usually wait for another bullish candle to the upside to confirm direction. This following bullish candle that I'm waiting for doesn't necessarily have to be a bullish engulfing candle. It doesn't need to be larger than any previous candles per se, but it does have to have a fairly full body and fairly small wicks as well. This candle here isn't bad. It has no wicks on bottom, fairly small wick on top, and a pretty full candle body as well. And it's the second candle that we've seen that displays these characteristics during our search for a confirmation candle. So using this candle to enter would be something I would consider. In this particular case, I could have also waited for this candle too, which is an even more convincing confirmation candle. It's large and has fairly small wicks on top and bottom, and a really full candle body as well. So this is also a really great choice. And we'll only enter this day trade on the close of one of these candle bodies. I'll never enter this trade if the candle is still printing. I'll only enter on its close. In addition, there's one thing I forgot to mention, and it's that we want to have the candle body of the confirmation candle that we're choosing close outside of the opening range and on top or below of the VWAP line, depending on which direction we're trading in as well. So for example, I'm going to put down a long position here. This is the candle earlier that I mentioned that I would enter long on. on, and I would enter on its close, so the entry happens somewhere around here. The next thing that I do is I take my stop loss and I pull it down to the bottom of the pullback. And I'm always going for 1-to-1 risk to reward ratio trades, which means my take profit is the same size as my stop loss. In this case, it's 11 points. And this trade was a winner in about 15 minutes following the entry. Now, I do also have risk management as well to add to this. What I do is following the entry, I wait for what I call an airborne candle. This means a candle that prints within the take profit area and has both its body and its wicks print within the take profit area. And none of these parts of the candle are touching the entry area. In this specific case, I didn't actually get a perfect airborne candle while the trade was actively being taken, but this bearish candle here following the trade take profit being taken would be an example of what an airborne candle looks like. When I get an airborne candle like this after entering, it's at that point that I will only exit the trade once a candle prints and its body closes within the stop loss area. Wherever a candle's body closes within the stop loss area following an airborne candle, I will exit the trade wherever it is within the stop loss, at whatever loss it is. Now, of course, I'm only risking 1% of my account per trade, so it can't be more than 1% of my account lost. And if, let's say, the candle following the airborne candle completely shoots down to my stop loss without giving the candle a chance for it to close a body within the stop loss, then that's just going to be a full 1% loss, and those happen. But if the candle body closes short of the stop loss, it'll be what I call a partial loss. So there are 3 different types of results that this day trade can end in: a win, a loss, or a partial loss. In this case, I didn't get any airborne candles by the time that the trade was a winner, so I didn't really have to set in any of my risk management tactics. And if, let's say, I would have entered this trade, no airborne candles would have populated, and it would have went straight to my stop loss, that simply would have been a full 1% loss. They happen. If you want to study what confirmation candles might look like, or which confirmation candles I like to choose on a day-to-day basis, or if you want to take a look at what my risk management strategy looks like in practice, or what partial losses look like, once again, first link in the description to the Discord. I post a video breakdown of every day trade I take on a daily basis, plus the screenshots of what the trades looked like as well, and I'll also post some other breakdown videos about new or different things I'm thinking about in relation to the strategy. First link in the description. Now this is what I would call a continuation long. There's also such thing as a continuation short, which is the exact opposite but to the downside. And if, let's say, price breaks out of the top or bottom of the opening range, but never gives us a pullback or confirmation candle, and price just continues to climb and climb, the only other type of setup that I'll look for is what I call a reversal, where price continues to climb without any opportunities of a continuation setup, and at some point over the course of the session would lose gas and come back down towards the opening range, which is where I could attempt to take a reversal trade. Now, I'm not going to get into reversals in this video. That's going to be for the following video I post, but continuation setups are the first type of setup we look for every day, and I usually only get the chance to enter a reversal maybe a quarter or 25% of the time when I'm looking for day trade setups. So continuation longs and shorts are much more likely, and they're the first thing that we look for every day. Reversals are much less likely, and they're only something that we look for if we don't get a continuation setup during the session. Once again, that'll be the next video. Now, I like to keep things simple, and I like to try not to overcomplicate things, so this is it. This is the end of today's video, and this is the continuation setup that I look for every single day. This continuation setup is the main contributor to me earning over 17% gains over the course of the last 4 months of day trading. If you guys enjoyed the video, I'm going to be coming out with some more shortly. And once again, if you're really interested in how I day trade and want to day trade along with myself and others using the same methods, please come and join the Discord, and I will see you guys all in the next one. Thanks for watching.